Welcome to another Southbank Investment Bulletin, and this week I'd like to talk to you mostly about Bitcoin and the cryptocurrency market generally. But I think this has to be put into context, and certainly there are a couple of big important points that need to be covered. Of course, the first one is that we've just had ETFs granted permission to trade. So what that immediately does is it ensures that there will be an easy way to both buy and sell Bitcoin over uh, any really time horizon, but you'll be able to get instant liquidity, and that's a big innovation. So just how those ETFs are going to provide instant liquidity is still to be tested, but it's certainly a big promise. So ahead of that announcement, there was a lot of speculation about the impact it would have on the cryptocurrency market. So we saw a significant rally. And subsequently, prices have dipped because it was a good example of buy the rumor and sell the news, which is a very well known and understood mechanism within trading markets, where markets are discounting mechanisms that take future potential and give it a present value. So it's quite normal for a widely anticipated event to be given a present value, and that means that the price rallies ahead of an announcement. Then, because it has already priced in that potential, that once it actually occurs, then there aren't nearly enough new buyers left to sustain an immediate move higher. And that's exactly what we've seen with Bitcoin just recently. Now, then we have the additional point that there is a halvening coming up in April. Now, one of the things that most people are familiar with is that the halvenings have generally occurred around the same time as big moves on the upside. But what I'm going to demonstrate for you with a couple of different charts here is that the big advances come after the halvening. And before the halvening, you get a partial pricing in of the new event. And then subsequently, you do get a bit of volatility either before or immediately after the halvening. So what we can see, for example, on this chart, which is from 2012, was that the halvening was in November, right at the end of November. So in the few months heading up to the halvening, we had a good sized rally. The price went from, give or take, around 5 to about 14, then came back to about 10 and went sideways. Then immediately before the halvening, the price dipped. So all the way through the month of October, it declined. Then it rallied through November. The halvening was in the fourth week, and then subsequently it broke out in January to new all-time highs. So we had a partial advance, a bit of ranging, a bit of weakness, a recovery, and then subsequently a big move on the upside. Then it's worth considering that the big move that we had in 2012 and 13 in the wider global economy was QE3. So we'd had QE1 and QE2 in response to the global financial crisis. By the time it got around to 2012 and 13, then the European markets were starting to roll over, and there was a clear threat to the global recovery. So QE3, which was QE without an end point. And that really did help to stoke interest in lots of different assets, and Bitcoin benefited from that. Then let's think about what happened in 2015 and 16. So in 2016, the halvening was on the 9th of July. So right around there. Again, we saw that there was a partial pricing in of the potential for the 4 months previous. So we had a good sized rally all the way through from the beginning of 2016 and then it picked up pace in June and got up to a new high, then pulled back ahead of the halvening. Then prices actually went down afterwards, and they kept going down, and they fell from about $680 and change to less than $500, then started to recover again, and by the time we got around to December, then it was breaking on the upside. So what happened in December of 2016? It was another big monetary event, but on this occasion it wasn't actually monetary, it was fiscal, and it was the Trump tax cuts. And that was a massive infusion of new liquidity into the US economy, and that helped to ignite a rally in lots of different assets, particularly the stock market, but then also in Bitcoin. So we had a very big move subsequently. So that's another good example that we get a bit of volatility around the halvening. Then we can think about 2020. So the halvening in 2020 was in May. Now, of course, 2020 was a little bit different because we had the pandemic swoon, and this panic in March, it took a lump out of the valuation of just about everything, and then subsequently we had a big recovery. By the time we got to May, well, then we had the halvening, but we didn't really have a big breakout to new highs until well into October, November. So again, this was another example that it was massive monetary accommodation contributed to the massive swings higher. But it is basically the halvenings are a concentration of focus on the limited supply argument. Because what a halvening does is it halves the reward for successfully solving a new block on the blockchain. But in practical terms, what that really means is that it doubles the cost of production. And what that, of course, implies then is that it's very difficult for prices to fall back down to old historic lows simply because the cost of producing new Bitcoin has gone up. And this is where we are today. So we've had a partial pricing in of the halvening, and we've had a good sized rally from October all the way through until this peak that we had last week. And now we're getting some pause and consolidation. And it wouldn't be at all surprising to see some volatility heading into the halvening in April of this year. Then there is the additional point that we'll have a good size rally around the time of the halvening because people will look again at that limited supply argument. And then we also know that once the halvening occurs, the cost of production is going to double, and the new cost of production will be a lot closer to $30,000. And just bear in mind that the price was pausing around the $30,000 level for all of, well, just about all of 2023. So that is going to be the new floor for prices. And right now we're closer to 40. Well, what that implies then is that there's about a 25% drawdown possibility, but then we have to be very aware that we're at a point right now where interest rates are very high. We also know that some economies around the world are slowing down. We know that inflationary pressures are moderating. And eventually, this high interest rate environment is going to contribute to some kind of economic strife. What we have certainly seen is that the 4-year cycle of halvening in the Bitcoin price has coincided with massive monetary accommodation on every occasion that there has been one of these halvenings. So it also therefore implies that in 2024, we have to be aware of the very real possibility that there's going to be a massive monetary event where, in response to an economic shock or a geopolitical shock or some other kind of shock, then there's going to be a central bank response or a government response which will necessitate that there's going to have to be a massive new round of money printing. That would be beneficial for asset prices of lots of different assets, but then uniquely also going to be particularly beneficial for Bitcoin, simply because we now have new vehicles for investing in it. And this is also going to create a very active options market. As soon as you have ETFs and they have liquidity, then you start to see options being traded on those ETFs. So that will then create an additional way of getting leverage to the Bitcoin price. And I believe that that is what we can anticipate later this year. So we're potentially being set up now for a buying opportunity ahead of a potential monetary event later this year, which will not just inflate Bitcoin prices, but would be beneficial for lots of different asset prices. And I think with that, I will leave you for this week, and I'll wish all the best to all of you.